ask a question about that.
Okay.
You actually answered it, but honestly, I'm not clear because I always see this double bottom in the chart
Okay.
and it's going, it's not going the way, or I don't know. My question is there are times that when the double bottom form
Mhm.
and the chart goes up, it will come back and retest the neckline and continue going up.
Okay.
Another time again, when it comes down, it will come to the support level
Mhm.
and continue going down. I want to know what is the reason for that? Why is it happening that way?
Okay. So yeah, still keep the question, and then we'll definitely get to it. We will have good answers for it as we go on, right? Just still keep on with the question for now. Um, yeah, keep holding the question for now. So, the answers will be clear. Let's just, can you all see my screen?
Yes, I can see your screen.
Okay, perfect. So let's go on for what we have today, and then I will
Yeah,
I will respond to the questions that we have probably in the last session. I've noted them down. Um, so who else do we have, and what other question? Okay, second, you are here, right, Pastor? Okay.
yeah, I'm here. Good
Okay.
evening.
Yes, sir. I hope all is well.
Can you hear me, sir?
Yes,
But perfectly fine, sir. What about you?
yes, I'm also good.
Okay.
So right on, let's move on quickly. So today we are going to um yeah, we are going to look at um framing setups around market structure, support and resistance and liquidity. So we will look at how to how understanding all these three concepts will come together for us to frame a setup. Um, I hope all of you are.
I can't hear you, sir. Hello?
I can't hear anything.
Yeah,
Same
sorry,
here.
sorry about that. So
Mhm.
I was saying that today we are going to talk about framing setups around market structure, support and resistance, and then liquidity. So we are putting these three concepts together, and then with the understanding we have, we'll see if we'll be able to locate all of that on the chart as we try to frame a setup for our trades. So and this week is like the fourth weekend for the classes that we're doing. And this is lesson 8 and lesson 9. So The recording would also be available if you want to watch it later to um, refresh or review whatever we talk about here. And we will have basically 2 or 3 sessions. So please just don't, let's relax and then jot down your questions and all that. And then let's go through it for today. So from our last class, we came to understand that market structure is simply the roadmap of price. So it shows us if the market is trending higher, um, higher highs, higher lows for bullish market, and then lower highs, lower lows for bearish market. And I've explained this a couple of times. Yeah, when we have a bullish market and when we have a bearish market and when we have ranging, consolidation, accumulation, or sideways market. So these are the 3 basic situations that we can find on the chart. So we also learned that structure is um, structural shift, or a shift is when price breaks a previous high or low. So when you have a chart and price breaks a high that you previously see, and when price breaks a low that you previously have seen printed on the chart, then we can say there is a shift or there is a break of structure. So to refresh our minds, let's quickly look at um, let's look at this chart here. Let's look at this chart here. So this is the V25 sell that I called right now. As you can see, it's in massive profit. If anybody sold, it's in profit. This is the 1 minute chart though, but yeah. So the reason, let me go to 5 minutes. This is the 5 minute chart. So let me go to 15 minutes so that you can see it well. This is the 15-minute chart. Good. That we have here. So can you all see the chart?
Yeah.
Good. So as we could see from below here, price has been printing bullish formation. So we can see price from down here, we shifted by breaking this previous. There is a high here, previous high here, where I'm drawing down here. Yes. So from below here, price shifted, took out this previous high, and that is the shift of what structure, or that is a shift, change of character. We can call it that. We can also say it's a break of structure because we broke the previous high. Then when price shifted, we saw a push to the downside like this, printing a low here, which is a lower high. This, and then price moved up like this. And then we see that price pulled back again, created a more lower low. This is a lower high, and this is a lower low in terms of if we are picking this area. But the reason why we still have a bullish formation is that this previous low is still intact. So with this formation here, we can see that price has shifted. From here, then we got the move to the upside here. Okay. And then we dropped this side and then it gave us another push to the upside here. So how many movements do we have? Let me go to 5 minutes to see if I can see these lines clearly. Good. So how many movements do we have? We have one,
Two.
okay. So this is the movement we have right now. Oh my God. Just a second. I hope you can all see. You can see the formation, right?
Yes.
Yeah.
Perfect. So this is it. This is it. So this is the movement. So we see a high here, price shifted, took off to the high, but it already took
The low.
I ignored this one here. There was a high here. So we took it out, dropped down, went up higher, break of structure. So we had the first break to the upside, came down, did another break to the upside. Then we dropped down and took this low out. Taking this low out, we still did not take the source, this area out. Okay, so we are still bullish. And when price moved up to break structure again here to the upside, that shows that we are in a bullish market. Okay, so what you have to be looking for is break of structure. Okay, structural shift when there is a shift. So the shift is what I'm trying to show you right now. So this is the market at this point up to the top here. Now, at what point are we going to see a change in this bullish market? At what point?
But,
It's um,
Mhm,
when there is a break of structure down to the
when a
down.
mhm.
when a previous low is taken out.
Good. So what is the last previous low in this formation here,
It's
right?
Yeah.
This low. So the moment this low is taken out, what are we seeing? It means that the market is telling us that it wants to go down. Do you guys get it?
Yeah.
Yeah.
Perfect. So that's exactly what I saw. I was in a buy already because of this break of structure down here. I joined the buy somewhere up here. Okay, so I joined the buy up here because I've been anticipating price to go up. Then I was in good profit. It came down back to the entry here. I was in good profit. But the moment, so when this drop was happening, I was anticipating that because already we saw this internal lows here and price came down, tapped into it, went up. So when this engulfing was happening, I thought it was just coming to sweep them off into somewhere here and then go up again. Because as soon as it takes this area, we are done with the bullish market. Okay, we are done. So it didn't. So it's swept down and then put me in a loss because I did not close. Okay, because my entry was somewhere here around this area. It put me in some loss, and once it started putting me in loss, you see this bearish candle was very, very, very big. This shows that there are sellers in the market or sellers are in control. So I quickly closed on the loss. I did not even wait because I knew if we are shifting to the downside, we are definitely going to retest. But I didn't want to keep holding the loss, so I had to close. So I waited, and then when I saw that price started moving upside, okay, moving upside, then I framed the sell. So I caught the sell. Initially, I was monitoring the sell at because there is no structural high here or any liquidity piled up around here for price to sweep. Okay. So I was a little bit skeptical, but I was like, this bearish movement is very, very strong. So let's see. So I used my fib to measure like this, and I was waiting for price at in between 50, 61%. So it hit it here, and then this bullish candle deceived me. It pushed it up big like this. I thought so. I was like, but I knew that inside premium, you can still look for price at 76.8%. Okay, so I held on onto the loss, and then I added about two or three positions at the
Position.
78.6% because I knew that the only way that I'll be wrong is if this high is taken out. Okay, because it is this high that broke the structure. So if that is taken out, then I'll be wrong. So here, then I saw this bearish engulfing candle. Once I saw the bearish engulfing candle, then I was like, wow, okay, that's good. So someone will say, why didn't you wait for to see the bearish engulfing candle before? That's a good question. Okay, so this means that I was not patient. Okay, because you have to wait to see the confirmation. Let's see that after the bearish engulfing, this is 5 minutes. After this whole 5 minutes candle, this was the confirmation. If you had entered your trade after that, you be in the trade with minimal loss, no loss. It's an entry without a loss. After this bearish candle, if you entered your sell here, this trade is with no loss. So that's why waiting and patience to see all your confirmation is very, 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 very important. Okay. So I recovered the loss I had earlier by not closing the buy, and I made small profit. Okay, on this trade. So this is me demonstrating to you break of what? Structure. Break of what? Structure. So break of structure is one key thing that you have to be able to identify. Okay, you have to be able to identify. That helps you to know the market is printing to the upside or going to print to the downside. Okay, so one would say, we are up, up, up. Okay, but there has been a change of character. So why should we still be up? So there will only be now we've seen a first break of structure here and gave us this low here. We broke here. We broke here. Got this low, pulled up, came down. We've broken again. This the second break of structure. We have this low here currently on this line here. Okay, so it's only when we take this one out, this one out, that we will start looking for something like a pushback and then a bullish movement. Okay, so this is ideally how it's supposed to be. But sometimes the market will be playing with this is just a 5 minute view. The market might be playing with a bigger time frame intention, whilst you will be locked up on the smaller time frame. That's why you have to understand the market from the bigger time frame perspective. So I'm only demonstrating to you how I caught this trade and why I changed from bullish to bearish. Okay, so at least I'm expecting price to drop more, but even if it doesn't go, this alone is enough to be a profitable trader. Just this movement is enough to make your $20, $10, $30, $5 for the time. Okay, so that's if you don't have capital and then the leverage to open big positions. Great. So let's move on. Any question with this? Any question? Okay. No question.
No.
Perfect. So the market structure shows us the roadmap of price, what price wants to do. That's what the structure shows us. But a shift or break of structure is when price breaks a previous high or a previous low. Okay, the shift. So it is the shift that indicates, that gives us the indication, the intention of what the roadmap is going to be like. So, how are we going to be able to frame a trade setup within the structure of price that we see on any asset or the chart? One, we have to look for an impulsive move. So, an impulsive move is a reaction of an area of interest. Okay, so we will get more into area of interest, but a reaction from an area of interest. Okay, a reaction of an area of interest. A reaction from an area of interest. That's an impulsive move. Um, and a reaction from an area of interest. But what is this reaction saying? Where is it going? So if this reaction provides um, a lead and an indication, this reaction shows intention of the market. So what we have to look for is areas of interest on the chart. And areas of interest are mostly around swing highs, swing lows, um, around support, resistance, demand, supply levels or zones. So around those levels, when we see an impulsive move around those area of interest, okay, the impulsive move is going to lead us, is going to show us, indicate to us the intention of the market. Okay, this impulsive move is going to show us changes to the state of delivery. So let's say uh, you are a delivery guy, or you are driving Bolt or Uber. So you pick a customer, you go and drop them. You are going on one direction. The moment you drop the passenger, what do? You reverse or turn back to the other direction and go and pick whoever is booking you or calling you again. So that's exactly it. Change of delivery. Okay. So we have to locate these impulsive moves around area of interest point or zones that indicates or shows the intention of the market. And the intention of the market is embedded or is seen in break of structures, BOS, break of structure. Intention of market is seen in BOS. BOS. Okay. So when this happens, it creates structural range or a swing range. Okay. Anytime there is an impulsive move around area of interest that changes the state of delivery or that breaks structure, what it means is that it creates a structural range or a swing range. Once that is created or that happens, we should expect a corrective move. This corrective move normally targets taking liquidity. So after the corrective move, what do we do next? Look for an engulfing pattern or look for price above resistance and below support to join the continuation. Okay, to join the continuation. So this is the framing of the trade within the setup. framing of the trade within the setup. Good. So let's go to the chart and then see how that looks like, how this looks like. So let's go to, let me clear all this and let's go to a higher time frame on vein 25. So let's go to like 4 hour. Okay, so this is the 4 hour chart. Let me even go to the daily time frame first. Okay, so this is what we see from the daily time frame. Good. Can you all see the chart? So as we can see on this chart, right from here, I can see we are in a bullish market because from below here, we've been moving up, 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 up to this area, right? So that's a bullish market, right? What is the characteristics? We have to see high, low, higher high, a low, and we have seen another higher high. Okay, so on the daily time frame is bullish. But let's look at this area. So what is the last high, the last low on the daily time frame, the last swing low? We've learned about swing lows and swing highs already. But okay, so I won't go into that right now. But this is the last swing low, and that gave us this current swing high around the top here. Okay, so let's see. This was relative equal highs, so I wouldn't call it a high. This area was like double tops, relative equal highs. But around here, price dropped into the middle here, this zone here, and from here, it gave us the high that we are dealing with right now. So, can we say that there is a change of structure or a change of this in the state of delivery on this chart?
Yes.
A change to where?
A change to the downside.
Why do you say that on this daily time frame? Salim, why do you say that? Mary, why do you say that? Is there a change
All
yet?
right. Because the
It's
the
not
it
yet
was
a change, sha.
giving it was giving a higher high and a higher low. Then later starts coming down. The last high is not
This
didn't
one,
go higher than the previous high.
this one.
And then when it came down, it now broke its structure here.
Okay, like you mean this low is broken here?
Yes.
So this is the break of structure, right?
Yes.
Okay. So from what we are saying, we said that um, when you have the one trend, okay, look for the swing point. Swing point is the highest point on the chart. Okay, the highest points on the chart. Those are the swing points. Okay, they are the highest points on the chart. So um, the highest points on the chart, they are the swing points. Good. So let's see. Um, So for me, Salim, what do you also think?
Yeah, this is not yet a change of character yet because the origin hasn't been taken out.
Good. Okay, so Mary, see, we have we have this is the lowest area on this chart. Okay, this is what the reef is giving us. So this is like relative equal lows, but um, still this last low to this area has not been taken out yet. Okay, so we have a low here, we have a high. This took this left side, this high here, it took it out. So we have this, the break of structure. Now, a high up to here, the price dropped down to make a lower high because it didn't take this out. Even if, yeah, then it moved up. You see, it's making a high here, making a high here. But until we break this previous higher point, okay, we are not having the next break of structure yet. So when it now broke it to this area, then we got the new break of structure. From here, it came down, took this becomes an internal low because the range is now here to here. So until this is broken in this area or this sense, we cannot say we are going bearish. Okay. So in this context, yeah. So now price drops into this area, taking this low, and then drops into this area. Like I said, always, so that's why we are combining all the concepts. It took this as liquidity, okay? It took this as internal liquidity, and then boom. So as price is on a bullish market, okay, where is it going to be targeting? It's targeting to make a new high. So this is the area. So if you were reading this chart and you had this understanding, if you were to get a buy from here, where is your target? If you get a good entry, your target is this, the previous high, because this is a bullish market. Okay. So you buy here, you target here. This is the TP1. I always say TP1 for a swing. Okay. Because you want to target price making a new high. Okay, now did price make it? Yes, it did. It took a long time. It did a lot of consolidation up and down here, but eventually it went up to that area. So price will always respect the structure, price action. It will always respect the basic fundamental structure that it follows. It went up. Now, when it got up, what do we expect? We expect that when a new high is taken, there will be what? A pullback or corrective. Okay, an impulsive move, there will be what? Corrective. The corrective happened. So this is the new high we got. This is the new high point we got. It tapped here, and then what did it do? It swept into this area. So we cannot tell where price will stop, but we can only use support and resistance or previous levels to determine. Okay, we cannot tell where it will stop. But when it's stopping, we can learn about the characteristics using sweep of liquidity and using structural shifts. So let's see this previous high that was taken out, price went up and came. You see, exactly, it sat on it like for support. Okay, it sat on it for support. And after sitting on it, what happened? Let's see. What happened after sitting on it? Mary, tell me. It pushed up again. Where is it going? It's going to make a new high. Okay. And what did it do? It got here, made an equal high, dropped down, and eventually gave us that new high. Okay. So, what is the last structural um, low that price made? Is the retest here.